That's cool, don't worry. Yeah, cool. Just intro slide, get cracking, right? Housekeeping, usual stuff. Keep the camera on, people. Come on. How many weeks now we're in the fund? You know who we are. Um, Stay muted for the slides because we'll just reduce the feedback from the audio. Involved where you can. Go on. Your opinions have got us to where we are now, so why stop giving them? I love your opinions. It's great. In the next slide, I can't wait for this one. So, to those who attended the pension fund, that replaced the wider fund meeting, and this is the state of the competition as of the 27th. So the benchmark is the green on the far left, currently at 8.17%. That's where we need to be on par with the market. Fund managers were first at just over 4%. We were at 3.75, and everyone else is nowhere near. The highest competitors are 1.12, and that's Stefan and Saeed. Greg and Kai went negative. We're not concerned at all. We're going to win, especially with our stock selection compared to the fund managers, which are present on the next slide. Yeah. Yeah, cool. So there's a few issues regarding bonds on ex ante. Some people can buy them, some people can't. So on the next slide, there's a bit of a the cash deduction kind of flow chart, which shows it on the far right. That the blue part just show how much cash people are spending. So if you pop it back to the original slide, you'll see the fund managers have 200k blocked off in orange for bonds, and so have Greg and Kai. Whereas us and Taha and Robbie and Stefan and Said, we don't. And there's a reason for that. Our bonds we couldn't buy on ex ante. So what we've instead chose to do, and with the direction of the fund managers, is to paper trade them. So we've essentially made a small spreadsheet, put in the key details, and we've locked in the 200k that we need on the spreadsheet. We've sent them over to the fund managers. They're happy, and that's why we don't have any bonds according to this pie chart. Does that wrap that part up, Console, before I move on to the benchmark? Does that one cover the bonds? Are you happy with that? Cool. So benchmark, that's just the return on investment that the market's given. I'm pretty sure it's the world index. So yeah. So it's taking a really global macro view of it. And essentially the benchmark's there just to compare our performance. We want to be beating it, well, hopefully. So yeah, that gets recorded daily. It gets adapted. It's changed all the time, as to our return on investments. So this is interesting, really interesting. You'll see from our portfolio, it's really diverse. We've seen a couple of front runners start to emerge, which I'll get round to in a second. But I want to pay a bit more attention to what other people are doing. Specifically, Greg and Kai. They've chosen to invest in ETFs, which is a stupid decision for many reasons. You've been allocated 1 million here, so by investing into an ETF, you're just buying into the big pie. But with that amount of money, you can actually buy every stock in that and maximize your performance. So that's what he's chosen to do, and as a result, he's now negative in comparison to the benchmark. Great for us. We're going to beat him now. Same goes for Stefan and Saeed. They've bought a US Global Jets ETF, which is basically just airlines. All the airlines like bundled into one product, and you now buy a little bit of each. We're going to beat them as well, essentially, because they're not going to generate any sizable returns. Taha and Robbie have kind of went for a blue chip approach, where they've kind of took the biggest companies on the stock markets and the S&P, etc., and thought, all right, we'll have a little dabble in them. The execution's been quite good, I will admit, hence why they're mostly green. If you look at their red bar, though, it's coming from this company called Adamas Pharmaceuticals, and essentially they're 20k down on Adamas. There's a reason for it. They had a COVID, I want to say a vaccine, turned down by the FDA. So that causes that. Common sense. There's no real strategy to Taha and Robbie, apart from we'll take the biggest companies and hope for the best. There's no strategy in Stefan and Saeed really either. They're born to some airlines, but we don't know what they're going to do with them because it's quite an empty portfolio. Same goes for Greg and Kai. It's quite empty. But you look at the fund managers, they're the real competition here. They've got pretty good execution across the board. So they're holding Apple, Amazon, Microsoft, Carnival, Tesla, Neo. Yeah, they've got a bit of a strategy going. They're looking at a bit of tech, really, a bit of EV, a bit of consumer discretionaries. It's like Carnival. They've all rebounded really nicely, which is why they're up so much. Quite diverse in a sense that they've got different regions. They've got good allocation of capital. On the far right, you can see they've exhausted almost an even amount of capital on each stock, so a fair allocation. But then if you compare it to ours, because we've got I think 29 stocks now, we've had to disperse smaller amounts, which is why it's kind of strewn across longer. In terms of capital, whilst I'm on the subject, we've got about 100k left to spend, which is quite a lot. I want to get that invested pretty quickly. The fund managers, they've got a touch of money left. And Taha and Robbie they're similar to us. Stefan and Saeed, Greg and Kai, tons of money left. They're going to really struggle. I can really see I'm struggling. So in terms of performance, as of the 27th, we were doing really well. But this is a very big but. So it's got Gonzalo, if you go on the next slide, please. I think it's the market roundup. Our thoughts on currency. Yeah, so we're doing pretty well. Fund managers are the only ones beating us. They've got better Neo execution. Same goes for Tesla. I've kind of walked through the portfolios. But I don't know if anyone's seen the markets today. I mean, has anyone seen the markets? Please take yourself off mute if you have. No.
Yeah. Had a bit of a stinker in it.
Yeah, markets crashed massively. It's been an absolute bloodbath. Everything's crashed. Everyone's been taking profit, essentially. November's been the best month since 1928. Stocks have rallied since March. The market's just been massively overvalued and it's pulled back. It's corrected itself. So what them results from the 27th mean? They mean nothing now. We'll still be ahead, but not as much. Yeah, which is why the market news is so important this week. I feel. So if you've seen anything on the news, please do chip in. at the end. Just move on there, console players. Cool, mark roundup. China, Australia, their trade talks are really crap right now. They're chucking tariffs on Australian wine and coal. So a bit of hoo-ha going on there, a bit of hostility. I don't know how far it goes in terms of like products and economic sectors, but I know it's bad. Moderna's approached the FDA for approval, so it's massively just boomed essentially. Pfizer and BioNTech done the same. In fact, they've just been approved by the UK. Asian oil, it's proven a difficult path, and it's really leaking onto the global macro level, which is why OPEC are taking some decisions to like cut production again. RKJ has entered administration. Yeah, 13,000 jobs on the line, I think. Pretty dire for UK retail. Wales have banned alcohol after a time for COVID restrictions. Interesting one if anyone's interested in M&A. S&P Global have acquired IHS Market for 44 billion in the hopes of making data and analytics more streamlined and more accurate and more profitable, essentially, whilst cost cutting a bit. SoftBank have acquired a 10% stake in Swedish firm Sinch. I don't know too much about that one, if I'm honest with you. I just saw it in the news. Joe Biden is going to appoint some top economic advisors, really shady. We don't know too much about them, but it's going to happen. Likelihood is a stimulus is on the way as well. Facebook are trying to get the crypto coin back on the road again. Been rejected a few times, but they're trying it again. Brexit's coming closer. It's the 1st of Jan, so we're expecting a lot of European volatility. Trade relations between the US, Europe, Asia, they could potentially all be affected to an extent, depending on the outcome of Brexit. But it changes all the time, so we'll be very dynamic in that regard. Global markets have had the best month this year, and they've fell off an absolute cliff today. I'm going to try and get Gonzalo to show some ex-ante charts at the end so you can visualize it. But yeah, it's really been a bad day there. Luckily, our portfolio is well hedged, so we're not too affected. But just to get everyone else involved, what have you heard? Take yourselves off mute, and if you've seen any news, feel free to chip in.
I don't know much about it, but I have seen a few times. I don't know if you've heard of it, but a company called Salesforce. Yeah, they were. They want to acquire Slack, because that was one of the companies I was looking at for like ESG, but I couldn't tell whether it would be a good one, because like I think that it's like they're trying to like rival Microsoft, I guess, in that respect. But because Slack, their figures weren't necessarily the best, I chose not to pursue it as much, because it didn't seem to warrant it. Like the figures didn't quite support. I couldn't tell whether it was going to be good or not, basically. But yeah.
No, great pickup. Totally slipped my mind to put that on the slides. I think they acquired them for 2.7 billion, I think. Yeah, they're really trying to integrate the work from home theme and cost cut in Slack, because Slack isn't profitable. Definitely interesting though. A lot of M&A going on this year. I think a lot of them are choosing to like pick up a cheap deal. McDonald's has come up with a plant burger. Do you care to explain it?
I just saw it in the news a little while back. They say that they are looking. There are a number of increasing vegans in the market, so they're trying to be more vegan friendly, and they've come up with this. It's like plant-based meat, kind of. It's not technically meat, but it tastes like meat. and they're making burgers with that.
It's interesting because I know they had contracts with like Beyond Meat and stuff like that.
Mm-hmm.
Crazy. Sorry, I've just seen your questions now. I've not been checking the chat, but that's a pretty spot on definition of an ETF. So well done to Joseph for that. Yeah, cool. Jamie, do you mind if I put you on the spot for a second?
Yeah, that's fine.
Cool. I know you wrote an article for Leeds Insights about Airbnb's IPO.
Mm-hmm.
Do you mind spilling a bit of information about that?
Yeah, I can do. So basically, Leeds Insights is just like this student-led publication about finance, and I chose to write about Airbnb, Airbnb's upcoming IPO. So there was a few touch points in there. Basically, one of them was Airbnb has a huge amount of debt. They haven't been able to turn a profit. I think for quite a few years now, they've basically been spending way more than they're earning, and they've kind of justified that by saying they're trying to just grow as much as possible by like marketing and just growing the like platform and things like that. But this has meant that they're actually a lot of debt, and especially now because of the whole tech industry and the climate it's in at the moment. There's some kind of deep-rooted issues within the company. One other one apart from the debt is like they've tried to increase their business and increase like new enterprises within Airbnb, such as experiences, which is basically where like the tourists will go to this city and then they'll get paired with a tour guide, whatever, and they haven't been able to do this successfully. So there's some real concerns there, but there's also, I try to highlight some positive sides, some positive aspects of the IPO. One of them being that they've showed quite good adaptability with the restrictions. They've increased massively domestic travel, and another one being the, I think this was directly related to the restrictions, but they don't rely too heavily on any one city, and that would have been a real concern because most cities are like kind of increasing restrictions on how many nights Airbnb hosts can host their apartments. So it's 90 days in London, 120 days in Paris. And yeah, basically because they're quite diversified, there's also some solid bones there, but there's also just huge inherent problems with the company. So yeah, it's a mixed bag, but probably more negative than positives.
Yeah, very good, man. I fully recommend everyone checking out his article as well. I know he's posted on your LinkedIn, so go check it out. Luke, SoftBank have let the US equities options expire. Can you tell us some more information about that?
Yeah, so basically they're still going to invest in US tech, but they're going to let the options that they've currently got expire, which has already cost them $2.7 billion and was widely criticized by investors all over. And they were behind what caused US tech stocks to rise rapidly in September.
Yeah, good spot.
Yeah.
Whoever just put that Twitter link in, thanks for that. I'm going to take a look at that later tonight because that is a pretty decent spreadsheet there. But Tesla is up, so don't worry. Burger King's IPO, shoot for it, explain.
It just opened this morning. It's live till 4th. Bidding is going on. It's oversubscribed already. But it is kind of overpriced, I think. But I think when it goes in the market, the prices are definitely bound to increase.
Cool. What else was I going to say? There's something on my mind. Oh yeah, Ant's IPO. As you're all aware, we bought Alibaba at the start. Obviously, it's sold now. Ant's IPO isn't expected for the next 2 years, which is massive because of Chinese regulation. They're really clamping down on it. So that really consolidates the Chinese EVs, which fell off a cliff today. But yeah, moving on to the slides. I think past that one. Yeah, fund activity, real simple. We bought AvePoint and GME. So AvePoint, it's basically a SPAC essentially, who are targeting a company. Let's try and find it. Slipped my mind. Yeah, it's called AvePoint. It's Apex Technology Acquisition Corp. And essentially they're going to be taking over this company who have got an equity stake in Microsoft Teams, I think, off the top of my head, which is really good news, especially if this whole technology thing keeps on mulling forward. Teams becomes an integral part of daily life, etc., etc. But the big one is GME or GamePoint, which Omar actually brought up. And he's got really good conviction about this one. So if you could explain it, that would be great. Is he on the call? Cool. I think you're on mute. Omar, I think you're on mute. No, he's gone. Cool. I'll explain it. So GamePoint, I've been looking at the technicals of GamePoint, and essentially they've been overshorted by 3 times. I'm not getting into too much depth here, but I can definitely point people in the direction of research because there's a lot to go over. But essentially what's happened is it's a short squeeze, which is basically when a stock's overshorted, so therefore has to go up in price. It's happened previously to VW, and what happened to VW was it exploded 900%, I'm pretty sure. And Omar spotted this, and we got a decent price, and so we're going to be holding it in the hopes of taking advantage of this like monstrous growth potentially, and taking a nice bit of profit. It's a short squeeze is a lot to explain, so if anyone wants to hang around afterwards, I'll definitely go into a more in-depth explanation. But yeah, recent top-ups, Palantir's fell off a bit of a cliff, so were topped up cheaply. Topped up on Neo as well. Why they've been downgraded to a sell by Morgan Stanley. So we bought the dip. So yeah, nothing too insane there. And then moving on. Yeah, we've got a few pictures here. Go on, so I'll send you a few links, I believe. Almost laptop crashed, by the way. That's why he left. Cool. So take this. I think it's Panajot. Take this investment proposal away because it is very good.
Hi guys. Skyward Solutions is a 5G mainly company, but like their official description is doing semiconductors. Like Intel, for example, Intel does processors. They do radio frequency semiconductors. Anyway, I'll get more in detail about what it says here later when I do the company analysis. So if you just scroll through. Yeah, that too, because I'll mention everything in detail later. This is just, if everyone wants to read it, it's a summary of everything that's going to be covered later. Can you go to industry analysis? Yeah. So basically, the industry in general is expected to have a big rise in the coming years. I want to say this is like a long-term investment, not something for the short term, because for example, 5G phones are expected to be mainstream in like 2022, 2023, with big in 2021 they will start being available in the US in some areas and in some phones, and by the end like of the fund in May, it will start in some like cheaper phones. So it's expected to grow in that department. Also, we expect big breakthroughs in Wi-Fi technologies. I won't bore you with the details, but like there's a new Wi-Fi now, Wi-Fi 6, and they're working on Wi-Fi 6E. So when a new breakthrough comes out, I will guess that the stock prices of 5-6 companies that are working on it would grow significantly. Also, radio frequency semiconductors are used in military, as you can see, aerospace and defense, in space, in surveillance systems. They are all expected to grow in the upcoming years. So this is another dying industry. As technology progresses, these companies are expected to progress. So basically, Skyworks is mainly known for their 5G radio frequency semiconductor. They have 51%. Their revenue is 51% from Apple last year, which has its pros and cons. But they also have contracts with other big companies like Samsung, Xiaomi, Oppo, which will become very useful in the future when they will roll out cheaper phones. So like everyone will have access to 5G. As of now, 5G is not that successful. That's why maybe the stock is kind of undervalued. I'll get more detail later. As I mentioned before, they're working on Wi-Fi 6E, which is supposed to have 100 times faster speed than 4G, which is pretty impressive. But like I said, when they find something new, they'll announce it, and then the stock will go up. for example. They also supply all of the companies that are doing routers and modems. So like, as I was doing the research, I thought that Skyworks was only known for their 5G things, but pretty much everything that has to do with internet, Bluetooth, or anything with wireless communications has Skyworks components in it, which is pretty impressive. They also have big contracts in aerospace and defense with Lockheed Martin, with Google in their OT devices, with Amazon in their Ring device, for example. They are used in BMWs, or as you can see, General Motors, for example. They are very diversified because, like, as the technology progresses, things that used to not have like cellular components in them now have, so they're pretty essential going forward. Yeah. Yeah, so analysts value Skyworks at around $168 per share. It's currently 140. I started doing the analysis a week ago when it was 130. So we bought like last week, we made 8%, 7-8%. Yeah. What else? A big thing that Skyworks is very good at is that they don't have any debt, zero debt at all. So they're very safe on that department. They can, whenever they want, they can take a loan. It won't affect them. They can reinvest it. So there's very much potential here for growth, for example. And during COVID, the revenue only fell 4%, which is impressive considering the times. What else? Oh, the dividend was increased by 14%, which is pretty impressive because the revenue was down, but they still upped their dividends, showing their great confidence moving forward. It's not a big dividend, it's only like 1.3%, but it shows their growth. Yeah. Okay, you can take a look at the numbers, but like they're not that important. I'll give you an overview of them. Basically, Skyworks is compared usually to Qualcomm, Marvell Technologies, and Qorvo. Qualcomm is a bigger company than any three of them. They do other stuff, but they're also a competitor in what Skyworks do. Their numbers are pretty much similar, except from ROE, which is pretty big in Qualcomm, making it actually it's too big, making it very risky, I believe. Qorvo and Marvell Technologies also have very similar numbers, except from Marvell, who has 58% in net margins. But at the same time, Skyworks is the only company that has zero debt, which makes them like the safest company to be around. Yeah.
Oh, very good.
There's stuff. There's two more. Yeah. Also, I don't know if you know Porter's 5 forces. It's like a method of doing competitor analysis. Basically, what this whole slide says that as technology advances, if you want to create a more complex component in this industry, you have to have greater infrastructure. It's not about how you develop it. Basically, if you have to have the infrastructure to develop something new, which is impossible to do if you're not a big company, and only a few companies can do that. Skyworks is one of them, and they have the biggest infrastructure in ratio of what they're doing. So pretty much they are covered in that department. That's it. Their past performance. So during the US-China trade wars, the revenue dropped 12% and the profits 20%. I forgot to put it in. They lost Huawei because of that, but that led them to diversify their clientele to other companies and other sectors where they use their components, while still maintaining a strong relationship with Apple. I did some data analytics on Apple and Skyworks stock price. They have very, very strong correlation. If you take their stock price from 2018 to date, they have 89% correlation. And if you take it, I did a mistake on the presentation, from 2019 to date, they have a 96% correlation. So like as Apple stocks increases, Skyworks does too. It's not always good, but because of the timeline of our competition, I think Apple is doing very good so far. And for the upcoming 6 to 7 months, it'll be pretty good. So I think as they have a strong correlation, potentially Skyworks will be good as well. Yeah.
Cool. Very good format. And people, take note of this, because this is like the standard right here. So who can provide a bit of an opinion about Skyworks then?
I think it's too much.
What do people think about Skyworks?
I just want to say, like, guys, if anybody like wants to do something like that, it's very insightful. Like, you learn so much things about not only the industry that you're researching, but like how markets work and all of the stuff like that. So it's really, really good opportunity to learn. So yeah.
Oh, nice one, man. I've got just one kind of question really about the correlation to Apple. So Apple was hit by the SoftBank options kind of, not scandal, but attack, if you will. Obviously, Apple's consolidated around the 120-ish mark. Do you see Apple kind of going further up, and do you think Skyworks will go up, or do you think Apple's kind of hit the roof?
I know Skyworks will go up because in these like 3-4 days that everybody was going down, Skyworks was going up for some reason. I don't know what's that about. I don't know about Apple. I can't comment on Apple. I haven't like searched that much to know. But like, it's gonna sound like a bit bad, but like it's Apple. Whatever the market, the way the direction the market is going, I think Apple is going that way too. So yeah.
No, fair enough, man. I think there's maybe 1 or 2 more pitches. I think there's one regarding Twitter, and then there's one regarding an ESG company. I think I popped them both over to you, Gonçalo, via Facebook. I think so. If not, I'll do it again. No, must not have. I'll try and do that now. There's one. Cool, so take it away.
Yeah, hello. Yeah, can you hear me?
Yeah.
Okay. So Vestas is a Danish company providing wind turbines. I've been doing this for years. Like since I've lived there, I've been seeing them as of cross bridges, offshore wind turbines. And I believe they follow our ESG strategy, which we're really structuring our portfolio around, a big part of it. And generally through 2020, they've been looking extremely well. They've been growing quite rapidly through Q1, 2, and 3. And like, frankly, since we're in a transitional period, the energy sector is really at the forefront of this change. So there's really no doubt of their growth. And I mean, in particular, they've partnered with Mitsubishi Heavy Industries to supply offshore wind turbines. So they've deployed around 5.6 gigawatts of offshore turbines and another 5.2 gigawatts in the future. They have a contract to supply 33 turbines in 2022 at 2 locations. And they've actually just secured, I think it was yesterday or today, an order for a 534 megawatt Brazilian wind park. So really they're looking quite strong in the next few months. And some of their competitors include Siemens Gamesa Renewable Energy, which have gained quite a large market share in the US. And I mean, also in Europe, Nordex have been quite competitive. And I think they just released 200 million euros worth of new shares into the market. But frankly, I think Vestas is doing quite a lot better in terms of their capital ratio and generally just their financials. And yeah, I really think this is a promising stock. I think you should obviously buy it long term. It's quite reasonable and it has promising plans and goals for the future. Yeah, that's really it.
Cool. Yeah. Well, you know what? I didn't pitch Iberdrola. Jamie did. I think it's Lou.
Yeah,
I haven't.
Yeah. I think I've had this stock in my portfolio for quite a bit now. And I've had Iberdrola as well. And I got this from you guys. I was trusting you guys with this. And frankly, I mean, it wasn't performing as I would have liked, but I really see Vestas as a safe and promising company. I mean, especially in today's day and age. And I really think, I mean, I'm not a very technical person, but I'm sure you guys can tell me if their financials show their growth and.
Jamie, are you still on the call?
Yeah.
Cool. Should we switch out Iberdrola for this company then? What's your thoughts?
Has this company just IPO'd? Or was I looking at the wrong thing?
I don't think so. No.
So has this company just IPO'd then, Amin?
No, I don't think. No. I don't think so. Wait.
I must have looked at the wrong thing then. Okay. Well, I was going to say if it has, then that could provide more growth potential than Iberdrola, which is quite established. Or was I looking at the wrong thing?
I think you're looking at the right thing. Amin, do you know the PE ratio of this company?
Yeah, I think it was. Was it 67? Was it 67? I think.
I'll have a quick check now.
I believe so.
$71.
Oh,
That's
71,
all
okay.
today. Yeah, I think Iberdrola is like low 30s, which less growth. Definitely want to keep an eye on. I think technical research is probably going to be the key, but from a fundamental perspective, it is neck and neck with Iberdrola, because it's only a matter of time before this type of renewable energy is going to explode. So really good research on that front. Well done. Gonzo, I think we've got Twitter to be pitched right now, and then that covers the pitches. I think Luke wrote this one from the top of my head. So take the floor, take it away.
Yeah, I was just having a little look at Twitter. As a gap fill opportunity, I'd say about 2 weeks ago, it tanked for some reason. I'm not sure about the news around that one, but I had a look into their fundamentals. Their revenue is pretty strong. It's their highest annual revenue for the past 4 years. They always perform that well since their IPO. I think they've performed the best in Q4 every year, and this year was their strongest ever Q3 in terms of revenue. So they're looking in a pretty solid position for a medium-term hold, I would say. I was looking at their users as well, because they lost quite a lot of their US market the past few years. They've been falling, but they're up 8% since Q2, and they're now an all-time high amount of users, with 90% of that new growth outside of the US, most of it in Japan. So it appears that they might be breaking into a new market, which obviously will be very good for their revenues. The one underneath that, actually, that MDA uses the monetizable daily active users. So that's what they describe as Twitter users who is easy to make money off, pretty much. So they're up 24% quarterly, which is their biggest jump in 3 years. And I read their report, and they're predicting another 19% increase in MDAUs for the next quarter. Their advertising revenue is up 51% on Q2, which took quite a bit of a hit because of the pandemic, with lots of retail closing. But also, they usually had quite a high upturn in US advertising when there's an election, which this year unusually didn't happen. The Twitter also did some analysis into what their user demographic was in the US, and it was a majority Democrat user demographic. So they said they're expecting about a 9% increase in users in the US over the next quarter due to Biden winning the election, as people return to Twitter after Trump's nice 4-year tweet.
Nice.
They also have growing expenses, so their running costs seem to be growing at quite a steady rate, and they have been for the past few years. So they expected 7% growth in Q4, but their revenue seems to stay on par with their growth of expenses. So it seems to me more just an expansion rather than anything major. Their recent market movement, so today I think they're up 1.5%, which, bearing in mind the whole market crashed, is not too bad. So for the past month, they're actually up. So to the day, it's up 12.5%. In the month of November, they're up 20%. If you look even more longer term, they're pretty strong going at almost 50% for the past 6 months, probably. If you go further down the graph, I just did some analysis in this graph. So that's where they took a big dip around late October. They seem to have some resistance at $45 and $48. $45 being the more short-term resistance, which they've actually broken through. I think they're currently at about $47. So I think if they break $48, then there'll be a nice push to around 52, 53 before they run into any more sort of resistance. They've also got pretty solid support at about long-term $45, short-term about $42. So there's a varying degree of safety with that. But as you can see from the end of October, it is prone to just dropping off a cliff out of nowhere. Long-term, though, they've got a pretty solid bullish trend. And yeah, it's a bit of a mixed bag if you looking at the company in terms of their financials. They've got a 42% profit margin. So I think it's pretty safe not short term, I would say medium term bet if it breaks 48. But I'm not overly convinced by their financials to hold on for a long-term position. The majority of their revenues through advertising, which they're up 50% on Q2, and they're expecting another 15% growth, they're saying, with the market growth in Japan and India mainly. So their revenue streams look pretty solid for the next quarter, and they've always had the strongest revenue in Q4 for the past 9 years at least. And this year's Q3 revenue is the strongest it's been in Q3. So I'd say at least till Q4 results are published, it's a pretty strong outlook. Yeah, that's why they also do the. That's why they also do the monetizable user demographic as well. So that's, I think they define it as users who click on 1 in 5 adverts or something like that, and that's up 24%. So that's their biggest quarterly jump they've ever had. So it looks like either the Japanese market is more prone to clicking on the adverts than the US market is, or something is happening there, but it's a large increase. It's a bigger increase than the volume of users. So I was mainly looking at Twitter just because of the gap fill. Because I actually got in at about 41.5, I think. So I think I was up 15% already. So for the past week or so, I think it's been about 12% growth. So when I said I was going to do a pitch on it, it's been 12% up since then. So quite a large part of that gap's filled, but it's just had quite a solid bullish trend. So I more looked at Twitter just because of the gap fill more than a social media company, and then went into the company's financials just to sort of see what it was looking like long term and to back up what the graph was showing, really.
If I could make a few improvements, could I ask you to re-pitch this next week or maybe the week after, but with a few changes?
Yep.
Could you create a comps table for like Twitter, Facebook, Snapchat, etc., and we can compare the revenues, the growth between quarters, the valuation of the companies, etc. Similar to what we've seen earlier tonight.
Yeah, sure.
Because that would make more. I'll make more of a confirmation if we are going to look to fill this gap. But on another note, well done for getting on Twitter yourself. Good spot. I think the slides have well, actually, before I say that, what does everyone think of Twitter? Feel free to pitch in. Anyone at all, please give an opinion.
Yeah, go on then. So I was just going to say, I know that with Biden's recent win of presidency, he's aiming to tackle social media platforms, I think, quite aggressively in terms of like neutrality of content, how they use consumer data and like privacy around that. And I was just wondering how that will affect kind of confidence in the market surrounding social media platforms.
Cool. Anyone want to build on that?
I'll just say one thing on that. That's why I wouldn't hold it long term, because I mean, Biden's going to come in January, I think it is. So policy change takes a long time. So I think we've got quite a decent midterm margin before any of that really takes effect on the markets.
Cool. Yeah, I agree. It will take a long time to swing around. If anyone has any spare time, I would really recommend watching The Great Hack on Netflix. Really relevant of how like data analytics was used in regard to like Facebook, Twitter, etc. to sway the election to win the swing states. So I was expecting some tighter regulations at one point or another. But yeah, I would fully recommend watching that. I think there's one or two more slides which I want to cover, and apart from that, that's it. Yeah, so regarding the fund, I want to be really effective and focused. So I was thinking, is it worth assigning sectors or maybe specialisms to people? It doesn't have to happen, but it is a possibility if anyone wants to really hone in on a sector. I'm receptive to someone picking one and running with it. Because personally, I'm quite honed in on the EV sector and that supply chain. So I'm really switched on about any news about the commodity sector for copper, or the Chinese subsidies for EVs, or the growing expanding market of EVs in Europe, or the commercial side of it. For example, like Jamie brought up last week, CIIG. But I want to hear your opinions on it. Is it something you would want or not? Luke, what do you think about this?
Yeah, I think it's a good plan, actually. For me, I think I'd go for, as you're saying, like close to a geography sort of one, because I'm a sustainability student, so that and environmental corporations I'm quite aware about. So I think it's a good idea to sort of specialize, because then I think we have a wider look on the news, rather with everyone not allocated to anything. We might all catch the same stuff, but with this you kind of have a bigger net, as to say, to catch news around the world.
No, I agree. Jamie, what do you think?
Yeah, it sounds like a good strategy. I think from my own experience, there's quite a bit of choice paralysis when you're looking at the news, just thinking about where to take stuff, what you can look into further, so that it can kind of help with reducing that, as long as we don't like miss anything by only focusing on like 4 industries, and then we miss something that could be good outside of those. But we could have like one on like one group of people just looking at anything else, and then so that we don't miss any other opportunities. But yeah, I really like the sound of that plan.
Luke, what do you think?
I think it's a good idea to be able to have multiple people looking into certain industries. We might get a better deep dive and find a good stock, which otherwise we wouldn't necessarily find on the wider news, which isn't as widely reported.
Cool. Jaya, did I pronounce that right?
Yeah, good, Jaya. I think it's a good shout. I feel like people already kind of naturally specialize a little bit anyway, because they just choose stock that they're interested in. So I feel like people have already kind of done it a bit anyway. But if people want to officially label and whatever, that works as well. But I think it's not their be all and end all, because I feel like we've got quite good coverage already. But yeah, I think just to make sure that it's like comprehensive, then yeah, good idea.
Cool. Yeah. Who else have I not really picked on? Amin, what's your thoughts? Because I really want a broad opinion.
Yeah, no, I think it's a good idea. I've grown a lot of interest in the renewable sector now, so I think it's better if I can do a lot more research, maybe more on the technicals.
Cool. Right. So if someone wants to drop in the comments what sector they would like to feed back on, I'll totally let you decide it, just so I'm aware of what people are going to feed back on. So for myself, I'll feed back on TMT, so technology, media, telecoms. And then I think, Luke, you were mentioning about like sustainability and a bit of social media, etc. So if everyone could like drop in what they want to cover in the comments, that would be great.
Should it be like TMT, like it's a big sectors, or is it better if we like choose a specific subsector?
The more specific, the better. Cool. So that's what I'll cover. Yeah, sure. That's not a problem. Renewables. Cool. Perfect. Jaya, not a problem. I did it. What's your thoughts?
Is it okay if I get back to you on that?
Yeah, cool.
Thanks.
Let's say for everyone, for those who are, yeah, that's perfectly fine. Let's say next fund meeting, we'll have some rough idea of assignments, but the idea is it will go ahead. Is that all right? Cool. I think there's like 1 or 2 slides left on, so I'm sorry. Yeah, it's nice and simple. How do you want these fund meetings to go? Yeah, I was thinking now with extreme market volatility, just to keep these weekly meetings. But if it doesn't work for everyone, I'm happy to change it.
Weekly.
Feel free to speak up as well.
Yeah, I like the format we're using at the moment.
Nice, cool. Yeah. In the run up to Christmas, we'll probably call it like a week or 2 before Christmas, if everyone's happy with that. I'll assume everybody's happy with that. Perfect, Ben. That's great. I know you sent 1 or 2 through last time as well. Just as a quick point in regard to the fund strategy as a means to go on. Everyone knows the strategy, roughly speaking. Vaccines, vaccine infrastructure, so like shippers, etc. EVs in some supply chain associated to like copper mining, etc. And we've got a touch of tech. These are all going to experience real quick growth. You're all well aware of the FDA approval of Pfizer, of Moderna, and Johnson & Johnson. It's gonna happen real soon. And obviously, to maximize profit, we're gonna lock it in, and we're gonna get out of it. And we're gonna try and put that capital in somewhere else. So we need explosive sectors to really come out now, really sustain this growth to win this competition. Because if we stay in vaccines, we're not going to win it. We need to constantly adapt the strategy. So if anyone can present any research or any ideas for the next fund, by the next fund meeting about where we can go, that'll be excellent. Yeah, this fund so far, it's been going great. We're well ahead. We're going to win it. We know that. Yeah, Gonzalo, what's your thoughts? We'll see about that. I think there's like literally 1 or 2. I think there's like 1 slide left. But I think, guys, yeah, we just need to keep this going. I think there's like literally 1 slide left. It's quite funny. I think it's after that one. Yeah, cool. You're free to go, guys. Nice little meeting to round it off. Cheers, guys. I'll catch you next week. Inbox is always open, as you all know. LinkedIn, Facebook, you know where to go. If anyone has questions, stay around.
Thank you.
Cheers, guys.
Great job, always.
See you guys.
Dan, are you gonna explain that like overshorting thing you touched on? Is that all right still?
Yeah, sure. I was hoping someone would stick around after that.